Welcome back, accounting boffins. Remember, we're busy with VAT. A quick recap. We said that we have a standard rate of VAT, which we know is 15%. We also know that we said 15% for our standard rate. We said that we're going to explain, obviously, the input VAT and the output VAT in more detail. Okay, so now, when we say input VAT, that's the amount paid to SARS for the amount by SARS, and that is what we're going to be dealing with now. So, two things. You've paid VAT and you've collected VAT. So, to make it very simple, input VAT, you've collected VAT, output VAT. Okay, you got it? Clear. Now, the difference between the two will determine whether you have to pay to SARS or SARS has to pay to you. So, if we take this a bit further, we find that our VAT is now divided into two categories, right? The VAT input, like we said, is all the VAT that we have paid on all the items that we have purchased and we've paid VAT. That's the VAT that we can claim back from SARS. Then the output VAT is all the VAT that we have charged customers. In other words, we've collected on behalf of SARS. That amount will then be the amount that we owe to SARS. We'll reconcile the two figures. That means your input and your output, and this will then tell you the answer that we're looking for, whether we're owing SARS or they're owing us. Input VAT. VAT is recorded against most purchases. Any VAT that a business pays on the purchase of goods and or service is called input VAT. That gives you now a clear understanding of what input VAT is all about. Output VAT. VAT is recorded against most sales. Any VAT that a business receives on the sale of goods and services is called output VAT, right? So that gives you now a clear understanding. Input VAT, all the VAT that you've paid. Output VAT, all the VAT that you have collected. Okay, now, how do you make your payments to SARS? A VAT 201 return has to be submitted on or before the 25th of the month after the tax period. The purpose of this form is to disclose the amount of output VAT that was charged and the amount that the vendor is entitled to claim back as input VAT. So in other words, this is a form that you fill in, the 201, the VAT 201 form, indicating all the VAT that you can claim back, all the VAT that you have collected. How do you do your calculation? VAT is collected by the business. The business is required to pay the amount collected over to SARS after deducting the VAT on purchases. Remember the difference between your input and your output VAT. So here's an example for you. If you have an output VAT of 140 Rand, meaning you have collected 140 Rand worth of VAT, and you've paid 84 Rand in input VAT which you can claim back, the difference is the 56 Rand which will have to be paid over to SARS. The difference indicates the amount that will be paid to SARS or by SARS. In this case here, because your output is greater than your input, it means you have collected more than what you can claim back. You owe SARS, in this case here, 56 Rand. But remember, you can have a situation where your input is greater than your output. It can happen. Think about it. A business just starts trading and they buy all their goods and services, but they haven't opened as yet. They've just bought and paid for services. Yes, at that point, they can claim back from SARS because they haven't started trading as yet, but yet they have bought goods and services on which they have paid the necessary VAT. Okay, now we come to inclusive and exclusive. What are we talking about here? Basically, when you're dealing with the price of an item, you say it either includes the VAT or it excludes the VAT. Now, here are certain permutations that you must know when you're doing VAT calculations. Inclusive means that the amount of VAT is included in the price. In other words, 100% would be your exclusive, your VAT would be at 15%, the total would be 115%. So if you see the word inclusive, it means that the VAT is included in the total price. That's what we mean by the word inclusive. Okay. Exclusive means that the amount is without the VAT at 15%. In other words, it's the 100%. So remember, exclusive is the 100, the VAT is at 15, and inclusive would be 115, where it's 100 plus the 15. So that will give you a clear indication of how to go about doing your calculations. So, if the exclusive is given to you, it will be 100%. If the VAT is given to you, it will be the 15%. If the inclusive is given to you, it will be the 115%. So keep this in mind. 100% exclusive, VAT 15%, inclusive 115. So therefore you can clearly see that depending on what information is given to you, you will then have to use that information to either determine what the question is asking for. So here we go. They're telling you that the inclusive price is 230, right? You are expected to work out what is the exclusive price. So watch, you take 100, which is your exclusive, over your inclusive, which is 115, and you find that the item actually cost, the normal price was the 200, the VAT was the 30 Rand, and therefore the inclusive price was 230. Clearly you can see, depending on what information is provided to you. Watch this here. You are told that the VAT amount to 15% was given. That means the 45 Rand was the VAT amount. Okay? So that was your 15%. Over 100 divided by the 15. Can you see? You're dividing by your known. Your known is 15%. Therefore, the transaction value or the cost price would be the 300 Rand. Clearly you can see 300 Rand. If you take your percentages and you work out 300 times 15, you're going to get a figure of 45 Rand. So what is important in terms of your calculations? Know when you are given the 100, know when you are given the 115, know when you are given the 15. So here we go. If the exclusive price is 1,000 Rand, your markup is 200%. The first thing that you determine is your selling price, which will be 1,000. Mark it up by 200% will give you a selling price of 3,000. That's your normal selling price, excluding the VAT. Keep that in mind. Then you bring in the VAT at 15%, right? And that will give you the 150. And then, obviously, that means that your output will be dependent on your sales figure. Watch, there's your 3,000 times the 15%, which will give you your 450. So, on the 1,000 Rand, on that amount there, you've paid VAT of 150 Rand. But then you took those goods, you marked it up, you sold it at 3,000 Rand, and you collected VAT from your consumer, from the end user at 450. So clearly you can see what amount you've collected 450 from the consumer or the end user, you subtract the amount that you have paid, and that's the amount that's due to SARS. Please make sure you understand what I've done here. On the 1,000 Rand that you've purchased, you've paid VAT at 15%, which was the amount of 150, right? You marked up those goods by 200%. It means you sold it. You added value to it. You sold those goods at 3,000 Rand. But the consumer or the end user now paid you the amount of 450 Rand, which was the VAT on the 3,000. So clearly you can see, you've collected 450 from the consumer, you have paid 150 when you bought the original goods. So output 450, input 150. What do we owe to SARS? The difference, which is the 300 Rand. Let's go through the question. It says here, briefly explain what is meant by value-added tax. It means a tax of 15% is charged by a vendor on the supply of goods and services. It is a tax that is charged by the vendor on the supply of goods and services. So basically, a tax. What is VAT? A tax that is levied by the VAT vendor. And remember, the VAT vendor acts on behalf of the government. What is the current VAT rate? Simple, 15%. What's the difference between input VAT and output VAT? Remember, we've discussed all of these. So these answers, you should be able to give them to me before I give them to you, because we've discussed this in our lesson today. Here goes. VAT input, it represents the amount of tax paid on the purchase of trading stock, consumables, items, and VATable expenses, right? Because remember, you're going to get some items that are not VATable. And again, here's some homework for you. Go and do some research to find out which expenses you can claim VAT on, which expenses you can't claim back the VAT on, right? For example, if you spend or you pay VAT on entertainment expenses, you cannot claim back that VAT from SARS. Okay, but that's homework for you to draw up a list of items where you can claim back VAT and items that you cannot claim back VAT on. Right? VAT output, what do we know? It's VAT output. This represents the amount of tax collected on the sale of goods and services rendered. In other words, whenever we sell the goods, remember, we're the VAT vendor. When we sell those goods, the VAT that we collect, that will be my VAT output. You are a registered VAT vendor. You regularly purchase goods from Shady Furnishers. The owner of Shady Furnishers offers you goods that would normally cost you 6,900, including VAT, at a special price of 5,700, provided that you pay cash and do not require any documentation. Right. Who are we dealing with? Shady Furnishers. The name tells you something. Okay. What concerns would you have regarding the non-payment of VAT? Clearly, the non-payment of VAT is regarded as theft. Theft is unethical, and this is an unethical practice. So yes, you can see the ethics component coming into our accounting work, where I told you accounting is a life skill. It teaches you ethics, to do the right thing even though nobody is watching you. You must be ethical in your dealings. So obviously, this is unethical because you actually creating a situation where there's no VAT being recorded. And in this way, the government, you are actually stealing from the government. There's no other way of putting it. To be blunt, you are stealing government resources. Would you accept the offer? Explain briefly. Obviously not. Tax evasion is unlawful. It is a criminal offense and punishable by law. The customer and the vendor would face legal consequences. Remember, if you involve yourselves in such transactions, obviously the reputation of the firm also is important. But more important, this is unethical. It is tax evasion, which we know is punishable by the law, and both the customer and the VAT vendor will be held responsible. Okay, coming back to our concept map, let's look at what we have here. Remember what we said? We said that in terms of all the concepts that you need to know about VAT, number one, recap, our rate is at 15%, right? The goods and services that we have here are all subjected to VAT with the exception of zero rated items. Okay, let's go through zero-rated items. What do we know about zero-rated items? Zero-rated items are those items, and we gave you examples of them before. One that I can just think of is milk, bread, beans, etc. Those items have a VAT rate attached to them of 0%. Remember, at any time, you can either add to that basket or you can remove from that basket. So it doesn't mean that for now, if the eggs are zero rated, that they can't be then subjected to the standard rate of 15%. If the minister feels the economy has improved to such an extent that eggs will no longer be seen as a necessary item to be in that basket, it could be removed. Or we said, if the economy weakens and we feel we need to add more items that will be subjected to zero rated to assist the poor in our communities and in our country, then clearly you can see that that is one that can change from time to time. However, your exempted items, right? Remember, those are items which will never ever have VAT attached to their transactions. School fees, rent for personal property, etc., etc. We've dealt with items in detail. Once again, you can go through the list to make sure that you're okay with it, which items fall in the exempt category. Now remember, a very important one here is your fuel. Fuel is not subjected to VAT. The reason? Because fuel has its own levy. And that one, I told you, remember I told you earlier in the lesson, I said, do some homework and find out what exactly is the fuel levy and what it amounts to. You'll be very, very surprised to find out the amount that goes into the fuel levy. Right, then we said input VAT. We discussed input VAT in detail, right? What do we know about input VAT? Input VAT is all the VAT that we as a VAT vendor have paid for goods. Can you remember the example that we had? Let's just go through the example one more time so it will clearly explain to you what we are referring to here. Here, this is the one I'm looking for. Let me just change the color for us. So we said that when we as a consumer, as a VAT vendor, when we bought the goods, we paid 1,000 Rand for those goods. So 1,000 Rand, the VAT on that 1,000 Rand is the VAT input that we as the VAT vendor have paid. How much VAT did we pay on that amount? We paid an amount of 150 Rand. Right, so we remember it's based on that 1,000 Rand there. Okay, then we marked up those goods by 200%. That was our markup policy. And we sold those goods at 3,000 Rand. Now watch, when we sold those goods at 3,000 Rand, how much VAT did we collect? We collected an amount of 450 Rand. Clear? Remember, I'm doing this as revision. On the current lesson that we are doing, I'm revising the input and the output so that you have a clear understanding of input and output. So here you can see, right, now, what amount is due to SARS? Clearly you can see you've paid 150 Rand as your input. You're collecting from the end user 450 Rand. Do you have to pay SARS the entire 450? No. Why not? Because you've collected the 450, but you have input, you have paid 150 Rand worth of VAT on that transaction. Therefore, the amount that is due to SARS will only be the 300 Rand. So now, the difference between your input VAT and your output VAT is now what is it either shows you whether you owe SARS money or whether they owe you money, right? So keep this in mind, that your input VAT and your output VAT would flow into an account called the VAT control account. And this VAT control account will then indicate to you whether it is an asset or a liability. What am I saying? I'm saying that it can either have a debit balance or it can have a credit balance. So in this way, you will see whether the amount is due to SARS or due from SARS. Okay guys, what we've done is we've given you an in-depth lesson on VAT with the theory and the calculations. Make sure that you remember the known figure, whether you are given the 100%, whether you're given the 15%, or whether you're given the 115%. The inclusive, exclusive, and the VAT amount. Okay, so make sure that you are able to master the section on VAT. From me, Ashraf Patel, and the team, keep your feet on the ground, reach for the stars, and be good. Goodbye.